So welcome team to another week here trading with Aussie. I've been traveling for the last week, so actually for the last 2 weeks. So it's good to be back on Aussie soil with my usual setup. It's hard to travel. I don't know how people do it with just like one laptop. It's hard, man. I've got 3 laptops here. I've got 3 screens. I need my mechanic keyboard. I need my mouse. It's hard not to trade with just a laptop. Yeah, I mean you can trade with your phone really, but yeah, not the same thing. Not the same thing. So I am back, and it's Sunday here in Brisbane, Australia. So wanted to obviously have a look at what I think the market is potentially going to give us in the next week. So from tomorrow on, and for our US friends, in a few more hours, it will be in the next 48 or so. Um, but as always, what we do is we always take a look at dollar and Bitcoin dominance, so our two main gauges or temperature gauges for what the market is looking like wants to give us. So on our last live, we were talking about this daily level here, which roughly was about 50% from the high to the low on the daily time frame that we were looking at. And I said we will face some pressure, selling pressure here, and we did see some reaction. You can see that big 20, this bearish candle right here. Obviously, bears attempted to push lower, but looks like we are actually going to proceed higher. Obviously, using our handy dandy fib levels, we know that the next pressure area will likely be in the 786 AS6 area, so somewhere around here in this box approaching. This will be likely our next area of selling pressure for the DXY, for the dollar. And obviously we know that if the dollar goes down and reverses down, usually risk on assets such as Bitcoin, such as gold, such as silver, such as many other things that we know go up, stocks and whatnot. So I expect the early side of the week to come to see a bullish dollar personally. I'd like to see at least a 786 tapped here, which also would coincide with this pool of intraday or internal liquidity, not intraday, but internal liquidity just here. You can see the size, and I'm sure that if we go on a 4 hour and we break it down a little bit more, we can see some better structure to go off. You can see here pretty much right away these candles right here, these levels here. I like to see them retested, and I would probably expect this to happen in the first couple of days of the trading week. Obviously we're talking US times here, so maybe more towards the midweek for us Aussie. So starting the week with a bit of a bullish dollar. We'll have to see if we reach this level here, which is the $99, 99, just under 99.5 to 99.7. If we reach it and we reverse in this week, or this week might just be a setup for the following week where we potentially then reverse lower. So, but for say the next 2 to 3 days of trading, we're probably going to see a bullish dollar here. Let's take a look at what the dominance is doing. So dominance, we discussed that we wanted to see this behavior. We wanted to see this BOS confirmed. We're not happy with this tiny little bit of breaker structure because this is an intra. You can see intra structure. So this was the low, this is the high. This was internal structure, not external structure. So we don't really count this as a BOS. The real BOS and test needs to come from this area here, which is the 58% for Bitcoin dominance. Until that is taken out decisively, and I mean with a daily close below and a confirmed lower low and lower high, we know that we cannot expect some effectively alt rally, alt to run. It's just not going to happen. Okay, so we are still seeing this zigzaggy, or some you can call it this consolidation, this sideways movement from Bitcoin dominance. Nothing to see just yet, but it looks like we might just face a bit of resistance here at this level. So we might just see a bit more sideways movement here on the weekly, on the week to come, on the trading week to come. So Nothing too exciting yet on the Bitcoin dominance. The excitement part will come once we start to close below the BOS and we form a lower high. So this was obviously the last high, hopefully it formed, and we want to see lower lows and lower highs and lower highs form. So we'll keep an eye out on the Bitcoin dominance for now. Let's take a look at what Bitcoin is doing. So you can probably see here on the weekly, I have what may look a bit of a messy chart, but I'll run it through. First of all, we can delete these magnets. We don't need them there. This was from a customer we were talking about earlier, the other week, before I went away. So you can see here, this is what on a weekly I have marked up. We have a cycle, and we have a bearish cycle. So all this one right here, this one right here, and this one right here. In my opinion, this is obviously what where we are at in the start of this bearish cycle, which is the 357 days, 378 days, and likely the 348 days. Now we all know that on crypto Twitter or CT, we have a lot of chatter about the 4-year cycle basically being scrapped, right? Like they're saying no more. Well, I don't believe that that's the case. I do believe that the cycle is still very much in play, and if it does play out, we usually see, you can see here, we have a big bearish down movement, a relief, and then a continuation down. Similar to this cycle, bearish movement down, relief rally, consolidation down. And here we obviously just had our big movement down, which means we'll likely see a relief rally and then a continuation down. In terms of percentage of drops from the top to the bottom, top to the bottom, and top to the bottom, we usually see a reduction in percentage. You can see here it was 83%, now it's talking 77%. I probably wouldn't be surprising if this cycle, we close somewhere between the 60-70%, not quite reaching that. And that is obviously because Bitcoin halving rewards get halved every 4 years, which means the drops, maybe this first cycle, I think it was like 95%. The second cycle here, you can see is 83%, 77% on this one. And we're likely, being optimistic, we can say 65% drop. So as the rewards go down, it just makes sense that those pullbacks and those, I guess, drops also decrease, right? Because miners do need to obviously keep mining. Otherwise, we're not going to have a network. If we take this into account, you can see this drop from the top to the 73,000 or 72,000, which is a key level. You can see here that only tallies to about 42% drop. So I do think that we can potentially go lower. Personally, I have talked about this in the past. It wouldn't surprise me seeing this 53% at a very minimum, which would coincide on a nice monthly level. And I'll show you guys here. You can see this monthly. It's a little bit more visible. When you go on high time frame, you reduce the noise, you remove the noise. You can see this last push down, bearish candle before the explosion up. This is the level that I think we're going to tap, the 50 to 65 in the coming weeks, in the coming months with Bitcoin. Okay, so something to keep an eye on. But before we get to the next few months and whatnot, let's just talk about what the nearest future might hold for us. So if we take a peek at what we just said, with Bitcoin doing a bit of a relief, we can possibly expect a push up back into the 105. And if we take the structure simply from here to here, all we have to do is take our Fibonacci levels, as we usually do, right? We'll just go on the daily now. So we're just going from monthly to weekly into daily. That's how we do it. High to low, we take our fib, and we can see that the 50% sits at about 103, 103 and something, 400. That's the 50%. This 50% to 618 is what we consider a normal retracement, right? It's not a strong trend, or it's not a weak trend. It's just a normal trend, meaning that there's a very, there's a 50-50 chance here, okay, 50-50 chance that we might come back here and reverse, or we might come back higher into a deeper retracement, perhaps coming into this candle right here and then reverse. I think that this is probably not the case. I think that we're not going to reach the 786, 886 just purely based on previous cycles. When a trend forms, meaning that the market has made up its mind and the direction we are seeing is established, we don't really tend to see that deeper retracement. We tend to see normal retracement. So 50% 618 is where it's important to understand what the Fibonacci levels are. So 104 to 100 and what do we say? Let's do it again. 104 to 103 to 109, call it 109, is where I expect a retracement. So if you are playing not so much daily, weekly, 3 days, really high time frame, we can expect a bit of, in my opinion, bullish price action to up to that level, right? You can see I've got a couple of setups here on my chart. I'm not going to chase the market here. If we have a nice deep retracement from this breaker structure, obviously this being the breaker structure right here, I want to see a retracement a little bit lower, and then I will attempt a long into our area of discussion. So this is our POI, right? Point of interest up here. This would be what I'm looking for on Bitcoin, and obviously overall with alts as well. So a shorter term bullish for a longer term bearish price action. Okay, so I will be looking for longs potentially. Barbecue's beginning. Have a great one. See you, George. Thanks for coming in, mate. This is what I'm looking at on BTC. So lower time frame, lowish, because lower time frame is obviously sub 1 hour, but we're talking here probably hourlies, 1 hour for hours. I'm going to be looking for longs, and hope if nothing, if anything that is not clear in the chat, guys, of course, feel free to type it away, or just leave a comment in down below on YouTube if you're watching this not live. ETH. Let's look at the number one altcoin, aside from obviously Solana and all that. Ethereum. Ethereum had a really nice run on the dominance side of things, in the sense that it has shown some strength, and now we are seeing it potentially coming for this liquidity. Okay, so it has kind of broken out of this consolidation a little bit, or it is attempting to. You can see this really bullish, big bullish candles here, is attempting to break out of this consolidation phase, and it's likely going to come for this liquidity pool here at the $3,600 level. So that will be my number one attempt for ETH. Of course, the number one confirmation that ETH wants to run a little bit. We'll have to see where Bitcoin is when that happens, because we will face two scenarios. We'll face a scenario where we tap the liquidity and we reverse back down, and maybe we go for this lower level liquidity and then we continue higher, or depending where BTC will be, we may come into some of these higher levels here of I guess retracements. You can see if we take a fib from the high to the low of the daily structure, which is not daily but probably weekly structure, you can see that we're far away from even the 50%. This liquidity level is not even at the 50%. So there is a chance that we might come back into the 786 or 702 or 618, which wouldn't surprise me. That would be a $4,000 plus 4,000 plus ETH before we see a reversal. So the short that I called out right now or earlier in the chat about, what was that, half an hour ago, it's just an attempt based on not higher time frames. So we're talking dailies, weeklies kind of structure. This is purely based on the 4 hour. And when I take a trade, my confirmations, I have obviously an edge that I live by, and that's my trading plan. And when I see a setup and the confirmations are there, I take it regardless of many things. But because you need to automate your trading settings, what I do see here is a 4 hour structure, and I'll explain this trade for those of you that do want to track it. Of course, this is the 4 hour structure right here. And we are now sitting, basically this was the last lower high, this was the higher low, so this was the lower low, this was the higher low. So we are attempting some sort of reversal here, but we need to face now some bearish pressure. And you can see this was the bearish pressure coming from this 1 4 hour block right here, which was the last push up. This one right here, last push up before obviously the drop down. So we've got some imbalances there still, and you can see that the previous 4-hour block did get tapped. So this one is for me null, not valid anymore. Whereas this 4-hour block, which took out these beautiful equal highs right here, so did take out liquidity, bit tick. I do play off this institutional candles right here, this one right here, and therefore I am on a short. You can see we tapped it, and then the reason why I didn't call it out here was A, I was traveling, and B, also best practice is to always see how the market reacts. So you can see we tapped that 4-hour block, which we just highlighted. It's this golden box, and what happened on a hourly structure is we printed a high, we printed an equal low, we printed a lower high, and then we started printing lower lows. So to me, that's an indication that bulls might be exhausted and bears potentially are going to start to take a bit of lead here. I don't know if actually not. It's not. I don't know. I won't be taking this trade without taking profit on the way. I will be swiftly taking some profit as we go down. But first, an immediate take profit area will be here at the 3,167 level. So I will do that right here on live. The second take profit will definitely be at these lows down here. So that's another take profit. And obviously we have our equal lows down here, which will be our final TP. So make sure that you do take profit on this trade if you are in with me, because like I said, there might, if ETH on the higher time frame, daily 3 days, is going to try and attempt to come for this liquidity up here, which we just highlighted, we might just see a shallower retracement for then a continuation up. So it's important that we take profit on the way down as the market hopefully drops in our direction. Okay, so that's the logic of the 4-hour bearish Ethereum trade that I called out, regardless of being overall thinking that we will come for this pull of liquidity higher. So we looked at BTC, we looked at ETH, and XRP. I did say, if you do believe that it is a bullish market that we are looking at and we're going higher, XRP is the one that probably looked the most bullish because at a structural level, broke structure. At a structural level, this was a low, and I think this could be very well be a higher low that we're doing here on the daily. So this is on the daily structure, of course, and you can see on a fib level, at a fib level, we are sitting at the 5618, which if there is a bearish demand, strong demand, bullish strong demand, because we are going obviously higher. Yeah, we're buying. This is the level to reverse the 15 to 618. Obviously, I like to take levels and trades at a lower, at a 786 or 86, but I'm not taking this trade personally because I'm flagging it to you guys if you want to take it, if you think that it's a bullish market that we are in, but I'm not taking it because I'm still in the uni trade here. So the uni trade that was called out, we snapped the entry. We had a nice run. We had what was that? 1, 2, let's have a look. So this was our entry right here, and we got up to 1-to-1 pretty much. So you should have taken some profit, and now we obviously back at entry. If you didn't take this trade, I'm not against it personally still to take it, and the reason is I wouldn't obviously use this code, and you can be a little bit tighter here, and you can do playing off of this 4-hour order block right there, and even do something like a market order here and a very tight stop loss just below this 4-hour order block, and you can still and you can still keep that the same TP. So something like this could be a better risk to reward than the original trade, and I might even take it and close my previous one, to be honest, because I do like the reaction here that we had on the 4-hour. You can see we're now attempting to push higher, so I might close my previous setup or even not even close it, but just tighten the stop loss. There's no need to close it and reopen it. You just tighten your stop loss, right? Unless you want to go heavy on percentage, but I'm happy to just tighten the stop loss just below here. So that is why I won't be taking XRP, because I do have an open long setup to counteract perhaps my Ethereum short, which I have here. So we're playing both ways based on structure. So let's change gear here for a moment, and let's talk at what is happening on perhaps gold, and forex and whatnot. We just obviously had a look at the dollar potentially going higher here, and with that, we will see likely a bit of a bearish start of the week for gold, unless this was already the big wick down. You can see that gold tend to move in a way where it has these big runs, and then it has a little pullback. Big run, pullback, right? That's just the market goes. But you can see that gold throughout the last year or so, all the pullbacks, they basically been eaten out, meaning that you get a couple of days of bearish price action, and then you got an explosion up. So I do think that if we do come a little bit lower on gold, it will not be anything dramatic. We may see a retest of this 4,500, call it, into 4,400, so 4.5 to 4.4. Like I said, unless this was already it, so we'll have to see how the market plays out at open. But this candle right here, which was just before the close of New York, you can see we already grabbed downside liquidity. So it's an interesting structure here for gold, in the sense that usually when we see this kind of liquidity grabs, tapping the previous liquidity pool or below liquidity pool, usually we see a movement up or in the opposite direction. So we might come for, we may, and I say I don't like to predict markets, right? We have to see what the market gives us, but we do have some equal highs up here at the 4,642. So we may see something like this eventuating, and where we then tap the liquidity grab, and then we come back lower for some of these order blocks right here. I don't think we'll come down here. It will be nice, because when and if we have a larger drop like this on gold, and we come back into this 4-hour candle here, which screams to me the 4,354 dollar candle screams. This one right here, I'll highlight it so you can see a little bit better. I'll do it with the magnet right there, and that's a 4-hour order block. So that candle right there, 4353 to 4315, it would be great, it would be awesome to come back into that candle, because that will give us a really nice big long to eventuate. But I don't think we're gonna go that deep, because that would be a just eyeballing a 76 roughly on the money. Yeah, 76 on the money. Look at that, low to high, 76 AA6. This candle just screams to me. I hope we're gonna come back there. We may weak, we'll see. Which would play out nicely with the thesis of dollar going up, and obviously risk on asset such as gold going down. So it will be nice. I am reluctant to short gold. I have tried throughout the last 12 months, every now and then, shorting gold, but you're basically you're praying that the pullback is long. I'd rather long at the moment and go with the trend, of course, as opposed to trying to fight it. So we'll see what gold does, but I do expect potentially a little pullback into not pullback, but a continuation higher before we drop lower on gold. And similarly, of course, we can do silver. Silver will likely do something similar. Silver looks already to me like it has already started to reverse. You can see we did have this this high. Let me just move the chart a little bit and get rid of the magnet. We did have the high formed on a 4-hour, and now we have a lower high. So potentially silver would be a nicer short than gold if you do want to short. Personally, I want. You can see I've been long in pretty much all the way. And if you did take the trade from the other week when discussed and called it into Discord, into the Aussie channel, I said this is what I expect for the week. So you can see I wanted to come back into this order block and lower. Obviously, we went a little bit higher, and I said just wait for the long. If you took the long, you took the first long and you went TP, and if you took the second long, you would have also obviously printed if you left it open. So it was a nice analysis there to come back to and watch. And speaking of trades called, this was the GBP USD trade called once again on the Aussie channel, where I said, I'm expecting GBP USD to have a big drop, and I even gave you guys the trading view idea why there was a divergence. Obviously, on you can see here bearish divergence printed. There was also a divergence with Euro USD, which had already started the run, whereas GBP USD was at the beginning, and we full TP'd on this one, so that was a nice 1 to almost 6.5 risk to reward. Very nice trade that one. Eventuated obviously in, what was that, a few days, I'm gonna say, not quite a week, I think, in 9 days, sorry, yeah, just over a week, 9 days. So, but this is swing trading, right? It's totally normal. So we had a look at some forex pairs. We had a look at oil. Oil was another one that was called out. Again, if you did take any of these two trades, full TP, full TP, obviously if you do let it run, you have a lot more than just a 2.5 almost. You would have had 1.2. Was that 2 point? Almost 1 to 10. So that would have been a nice trade if you let it open, if you let it run. Personally, I take trades when I am scalping, right? That's the difference. Knowing what you're calling, knowing what to want from a trade. This was a scalp. This was a scalp. So I'm happy to close it in a matter of a few hours. So I don't care if the trade runs, to a 1 to 10. You can leave it open a little bit. You can leave a runner percentage if you want, but I'm very happy to just close it. And my set TP, because this is a scalp, it's not meant to be a swing, so I don't want to get messed up with trading when I call trades, if and call apples need to be apples, pears need to be pears when it comes to trading. Let's take a look at stocks, and then we can pretty much wrap up. So Moderna was called out on November, just end of November, at $24 on the dot and 1 cent. We have officially now almost done a 2x, so not bad, team. We are 77% increase. Very happy with that. I hope you guys took it. I ran you guys through the reason for it. You can see not there, but on a big volume spike, which we love to see when it comes to stock. We have obviously reached a big low, and I'll show you. Actually, I might just show you now on a weekly. We retrace all the way down. This stock all the way down. So, and we sat at that level for weeks, consolidating and moving sideways and creating liquidity until we finally grabbed downside liquidity and obviously saw a big volume spike. So when you see liquidity pool being tapped at a low like this, and I'll just get rid of the volume so we can see a little bit better. When you see liquidity pool getting grabbed like here, and a big volume spike, yeah, you can pretty much bet that there's going to be a large move, because there's obviously movement in the background, investors, capital injections, and so forth and so on. So this was a great trade. This is a great trade. My first TP will likely be at around $66. So a little bit higher still. But hey, if you 2x on a stock, right? Yeah, and you want to take some money, I'm not going to tell you not to. I'm going to say go for it. RIVN, changing of stock here once again in November, after we nailed the entry at $11 and ran all the way to 22. So this was a clean 2x, just about. We said, I said expect likely going to be will likely move into this fair value gap and then see a reversal. This was the fair value gap that we were eyeing, and guess what happened? We got into the fair value gap and we reversed. So it's nice to understand the charts sometimes, isn't it, team? So now, if you think that EV is a market that or you want to be a part of the portfolio, of your stock portfolio, this would be likely initiate position one. And I say initiate because we could go lower. We could potentially retrace into I think, the $14, $13 potentially, so a little bit of a deeper retracement. But you can see that we're now sitting into that 50% 618 zone already. And most importantly, we have tapped this beautiful, beautiful candle right here, which is a daily order block of importance here. So we may very well see a reversal. You can see this was the expected move that we were discussing back in November. I still very much think that this could be in play, but I wouldn't be against initiating a position here today and save a little bit of capital for lower, for potentially when we go into the $14, and maybe split the position even in three and wait until the $12. So something like 16, 14, 12, and you split your position in three, guarantees you a better DCA price overall, right? You know that I always talk about not going full into one position when it comes to stock, and always layer your entries. This is what I mean by layering your entries. But yeah, RIVN did exactly what we wanted it to do, which is retracing. And if you do think that this stock goes higher, I do personally. Yeah, this is a nice entry one, presenting it at this current price. And the stock from MSTR, we were talking about, so obviously MicroStrategy. We talked about it the other week when we said 19 was the 9th of Jan, $4.85. We ran all the way to $5.78. This is still a good entry if you want to asymmetrically bet on MSTR, which is obviously the Michael Saylor MicroStrategy company. This MSTX is a 2x leverage position, right? So you're basically it's an ETF first of all, so you don't own the asset. But you basically have the ability to do a 2x leverage position on MSTR. MSTR. Sorry, I should have been a doctor sometimes, so no audio. No, the audio is definitely there, mate. I don't know if maybe it's your settings, but the audio is definitely there. So you might just want to maybe change your settings. Yeah, all good. So yeah, MSTR. If you want to, obviously, or if you do have some MSTR in your portfolio, great. If not, I do think that MSTX could be a potential. It's all good, but it's all good, fam. This could be a potential better risk to reward, right? So you're entering at $4.86 versus the 100 and whatever it is for MSTR. So if this stock goes back into, say, $10, $20, well, then you are 4x, 5x your entries, which you're not going to be doing on MSTR, right? Because if you'd be lucky to do it 2.5x at the moment. So same stock, 2x leverage, ETF way. Okay, so MSTX is still a play. If you want, go small position. This is not a position that I would recommend by all means to go all in because this is a risky trade, especially if we think that Bitcoin is potentially in a bear market. We may very well see MSTR and therefore MSTX halving, going into from $4 to $2, from 140 to 70. So something to keep an eye on. And BKKT, or backed holdings, after catching this insane run, which was a clear 7x for us in GTG, we have now discussed about the possibility of coming back into the fair value gap. Well, guess what? It didn't. It just ran. So I'm not going to tell you to chase here. Hopefully you are patient, and hopefully you wait for a pullback. Pullbacks do happen in time. You just have to be patient. Let the market come to you. You can see usually after a big spike up, there's a pullback, and then there's a smaller bounce, and then maybe another big spike up. So we could see something like this, come up, come back into this, and then come back down, and then keep going higher. So I'm not going to try to catch a move halfway between the high and the low. I want to wait for the lows, right? We want to wait for the lows. So just be patient on this BKKT or backed holdings. Yeah, I mean, after catching a 7x, you shouldn't be complaining on the stock side of things. So that is pretty much what I had in store for today. In terms of obviously the week, just a quick recap, DXY potentially coming up higher into the 76 before pushing lower, which in return will see things like gold reversing lower before going higher. So the exact opposite. Bitcoin dominance not doing much, just going sideways, and we could be playing some lower time frame bullish price action here on Bitcoin to then catch a big swing down on higher time frame. Okay, so a couple of setup ideas there, with ETH of course being alive if you're catching the short, if you like the short idea, or XRP also being live if you like the long idea. So we've got 2 live trades, and of course Uni as well if you're still in it. That's pretty much it, team. So let me know if you have any questions in the chat. All this was recorded, so I'm going to go and put it on our YouTube channel shortly. And if obviously you have any questions on YouTube, feel free to just either drop a comment in the comment section or just ping me. Order blocks, of course. That is, yeah, this is a very good. Let me just see if I can find one. Okay, so let's do this. Let's go up here and let's explain what an order block is. So order blocks is basically let me get rid of that, get rid of that. When we talk about order blocks, we are talking about candles. If you understand how a candle is made, obviously a candle has an opening and a closing, and usually has wicks, right? Up and down. So that's the anatomy of a candle. If I was to do it drawing, probably is a little bit easier. So we can draw one like this. Let me just do, let me just get rid of the extension and I'll explain. I know that I'm talking about candles now, but if you want to understand order blocks, you need to understand what a candle is. So usually a candle starts, well, a bullish candle starts, or open, I should say. Why is it not giving my drawing tools? Hang on. I'm frozen. What's happening? Oh my gosh. Oh, there you go. It just tripped. Okay. Let's talk about it, Ken. Instead of trying to draw it, I'll just point it out because I think that was just a bit too much. Oh, there you go. Now it's all coming back. Jeez Louise, what's happening? Get rid of that, get rid of that, get rid of that. Let's delete this, and we will use an actual candle to explain the anatomy of a candle instead of trying to draw it because I'm not Picasso. Okay? Let's take this candle right here, this bearish candle right here. When we look at the anatomy of a candle, in this case, it's a bearish candle that we are looking at. We know that a candle has an opening, a candle has a closing, a candle has wicks. When it's a bearish candle, the candle opens at the beginning here, below the wick. Okay, so it's a solid portion of the candle, of the rectangle. The closing for a bearish candle is the bottom part of the rectangle. And then obviously we have the wicks. The wicks are not, we take them into consideration when obviously we're taking fibs and whatnot, but they're not the body of the candle. The real body of the candle is the top and the bottom. For a bearish, this is the opening, this is the closing. What's happening here? We have obviously a lot of price action. This is a daily candle. So when we go into a lower time frame, we will have many more candles forming this daily candle, right? And those candles are those succession of candles or those cluster of candles. They're called order blocks. An order block is nothing else but an aggregation of candles that effectively gives you a price action. So if we go on a weekly, we change now, we're on the daily, we go on a weekly, you'll see that these, 7 daily candles become 1 weekly candle. Is it making sense? So this daily candle, which we have right here, and I'm actually going to highlight it in a different way. I'm actually going to do this, right? And we can go on a 4-hour and we'll go and find it. And you can see that that same daily candle is actually more than just 1, right? On a 4-hour, it's obviously 6. 6 times 4 is 24. This is an order block in the sense that we have a succession of candles forming one higher time frame candle. This happens on every single time frame, on daily, 4-hour, 1 hour, 6 months, 1 month, everything. Because obviously, when you start from a higher time frame, you then have what? A lower time frame. and the lower time frame, it's composed of many candles, forms the higher time frames. Okay, so that's how the candles are formed. In order blocks, what's happening is you are actually creating structure sometimes. This was obviously a very sharp drop. So it's a section of candles, it's a composition of candles, it's an aggregation of candles that has certain importance. In this case, we obviously grab previous liquidity, and it's an important order block for us to go and back. When I talk about order block on higher time frame, and I talk about things like going and find an important order block, I mean literally a succession or an aggregation of candles. In this case, this will be a nice order block to analyze, where we are on a daily. We obviously have a low, a low here. We came and swept the lows, and then we stopped. You can see that these candles right here stop, and basically we move sideways. So this whole group, if you like, of candles right here, it's an order block on a higher time frame, right? Because now we're on a daily. If I go on a monthly, this might be one candle. If I go on a 2 weeks, this might be a couple of candles, and so forth. But it's an important area for us in the market to come back and revisit, because it tells two things. When price slows down and moves sideways, is creating liquidity, up and down. So we're creating liquidity on the up. Stopped drawing. Yeah, I'm frozen again. It's creating liquidity on the upside, and it's creating liquidity on the downside. So if we know that we're creating liquidity, we also know that liquidity gets usually taken. So we either proceed to move up or continue lower. So an order block after, hang on. No, don't switch. No, it is there. Okay, cool. If we go back and we look at then what happens after we break in whatever direction, in this case bullish, we also want to see the reaction of the market when we come back into that order block. And you can see here, the reaction was obviously we broke through, we actually gapped in this case, meaning that the reaction was very strong. And we then proceeded to, let's have a look what we did. We then proceeded to stop a little bit, and then we continue lower. So reaction in order blocks is what we want to see. We want to see reaction either bullish or bearish when it comes to order blocks. They're basically really important parts in the market for us to understand. We want to see reactions either bullish or bearish in order blocks, but they also tell us that we need to go deeper into lower time frame. Is it making sense? It's Beiji. I am just rambling on order blocks. Yeah, I could go on and on and on, but I don't want to go too deep into, confuse. I'm trying to simplify as much as possible. Seen people doing trades on 4-hour order blocks, but I'm assuming they aren't just taking it off 2 candles. Yeah, it's making sense. If you do take 4-hour order blocks, are great. It's 4 hours is a very powerful time frame. All good, no problem. That's all we're here for, fam. 4-hour order blocks are very powerful. They are powerful. Like we were looking at gold, right? Just earlier. This candle right here, it's a 4-hour candle. This 4-hour candle right here took previous liquidity, you can see, and is sitting here. So I want to see now, if I go into hourly, I want to see what's in that 4-hour. You can see that 4-hour candle has a nice 1-hour candle there for me to potentially short. So that's an opportunity there. Or you can even go deeper into that same order block, into that same 4-hour, and break down your time frames into 30 minutes, 15 minutes, and see what is that candle made up from. Like in this case, if you do think that we're going to go higher, which we discussed, I don't know if you were there in the stream earlier, I think we'll come back for this liquidity up here on gold. This will be a beautiful 15 minutes candle to play off based on our 4-hour candle. So where we were before, this is a 15 minutes candle that we can definitely keep an eye out for a potential scalp when it comes to gold for the week. Something like this. It's a nice trade potentially on gold. And we found this trade basically just doing what? We went higher time frame or 4-hour time frame of interest. Let's have a look what this one candle is composed of or made of. which is obviously made of many different lower time frame candles. And then we look at the order blocks, and you can see this is another order block right here. That 15 minutes, we're in a 15 minutes order block right here now, where we are doing what? We are just basically moving sideways, and we just discussed that just earlier. Sideways movement creates what? Liquidity, and therefore there's a very high chance that we'll come back lower, grab the liquidity, tap the order block right here, which is where smart money is likely going to be in over. It's they have positions up and down here, so they want to come back and close them, and then we'll continue higher. So this is how you break down higher time frame into lower time frame. You definitely want to have an understanding of order blocks. You want to understand liquidity because they'll form a very important part of the smart money concepts and how we trade. Hopefully that explained it, but if not, feel free to ping me and we can chat more in more details. Yep, all good, all good. Perfect. Love that last minute questions. And this is another last minute trade that you can take. So if you're stuck until the end, you also got a bonus trade here on gold. We talked about the liquidity up here being the target for gold, in my opinion. So worth chucking limit order down here on gold at 4565, in my opinion. Bonus at the end, Lars, always pays off. Sticking until the end, that's where the gems come in. Perfect, team. That was awesome. Thank you for the interactivity too. I love the questions. And if there's no other questions, all good. Pleasure. If there's no other questions, I'm gonna go and upload the recording on YouTube, and everyone can obviously catch up. So I hope everyone has a great Sunday, either evening or day if you're in the US. And thanks for sharing your time with me, as always. Much love, and catch you guys and girls next week.